If you're brand new to YNAB, don't watch this video. Go watch any number of my other videos to help get you started. What I'm sharing here is going to be a hodgepodge of advanced tips and scenarios that I've come across while coaching hundreds of clients. Now, not all of these are going to apply to you, so feel free to use the timestamps down below to hop around and find things that might be relevant for your situation. That being said, let's jump into the first one. So the first thing I want to go over is tracking money that you lend out to someone else, a friend, a family member, or maybe even lending money to your own business. The first thing we're going to do is we're going to add a brand new account. Now, normally, I'm not a fan of adding fake accounts into YNAB, accounts that don't exist in real life, but that's what we're going to do here. So it'll be unlinked because, again, you can't link to anything. And the account type is going to be asset. You're loaning money out. Someone owes you money back, so it's an asset. It's your money. We're going to give it a nickname, like maybe loan to friend's name, right? And then the current balance, if you're doing it from the very beginning, should be 0. If you've already done it and you don't want to sort of retroactively track it, then you could just put whatever the current balance is that they owe you. I'm going to say that I haven't actually loaned them any money yet, and I'm just now setting it up. So now I've got this loan to friend account down here in the tracking section. And the next thing I want to do is create a corresponding category. So I'm going to use my reimbursement section. And if you have questions on reimbursements, I have a whole video on that you can check out. But we're going to have loan to friend. I'm going to use the exact same name over here. Once you've got the account and the category set up, our next step is to start handling the transactions. So let's say that I'm going to send $2,000 to my friend. I'm going to let them borrow this money, and I'm going to do it from my short-term savings account. So I'm going to click Add Transaction. And this is really important because whenever you send money out to your friend, you're going to do both a transfer to the asset account and you're going to categorize it as spending. So in the Payee section, you're going to scroll down and select To From Loan to Friend. The category, you're going to scroll down and select that loan to friend reimbursement category. And then the outflow is going to be however much money you're lending out. When this happens, you're going to see my short-term savings balance drop, and you're going to see my asset increase. It's actually going to create a $2,000 inflow to this asset. So it helps me keep track of what they owe me. When I go to my budget, I'm actually now going to be overspent here. So this is the important difference between a normal reimbursement where you're expecting to get paid back pretty quickly versus something like this where your friend's going to pay you back over time. In this scenario, I'm overspent and I have to cover it because the money's left my account. So I need to find somewhere in my budget that I can cover this from. In this case, I'm going to pull money from my kitchen renovation savings down to my loan to friend category, and now I'm covered. So that handles the initial transaction of me loaning them money. Our next step is, of course, what do we do when they start paying us back? Well, you're going to do the exact same thing, but just in reverse. So I'm going to go over to my loan to friend account. I'm going to add a transaction here, and the payee is going to be To From checking, and then it's going to be an outflow from the asset. Let's say that they pay me $100 and save. Now, when this happens, the asset should drop to show you what the new balance is that they owe you, in this case, $1,900. And when I come over to checking, I'm going to have this transaction here. Now, in reality, the way this is going to look in real life is that they're going to be coming through and it'll be like a Venmo or a Zelle, right? So let's say that they Zelled you money, right? And it's going to come in like this. And so you're going to see, oh, Zelle from friend, cool. What do I do here? Well, you need to categorize it and you need to do the transfer. So we're going to double click, change this Zelle from friend to transfer from loan. You're going to bring it into the exact same reimbursement category that the initial amount was sent out of. This is important. I don't typically like to bring it into ready to assign because of the way it's handled in my reports. So I do reimbursements, loan to friend, save. Now the loan to friend shows that they only owe me $1,900. And when I go to my budget, I'm going to have a positive amount of money sitting here in the loan to friend category, at which point I can click, move to ready to assign, or any of my other categories, and basically do whatever I want to with that money. So that's really all there is to it. Again, the reason that I do it this way is because when I go to my reports, I don't want the reimbursement back, the loan payback from my friend or family member or whoever it is, to show up as income, because income is somewhat hard to filter in and out. Whereas what I would like to do is over the course of a year, if they finally pay me this back, this whole category would go to zero because the total outflow and total inflows would all match up to each other. And if I don't want to see it when I'm analyzing my reports, I can simply just scroll down here and filter that out. So it makes it really easy to exclude from my reports. That's why I like to set it up this way. Now, this brings us to the second thing I want to cover, which is the opposite of this. How do I track money that I'm borrowing from somebody else and when I can pay them back? Well, you're going to set this up in a very similar way. So we're going to click Add Account. Again, of course, it's going to be unlinked. Now, when you're setting up the situation where you're doing the borrowing, you can use a liability account or you can use YNAB's new loan feature. Either one of these will work. If you really want to be able to sort of see what happens if you accelerate payments back to whoever you borrowed money from and how that will help you, over time and how much, money that's going to save you or how quickly you'll be able to pay it down. If you'd like to play around with those sort of calculations, you'll want to use the mortgage and loan feature. Certainly if whoever you're borrowing money from is charging you interest, that might be interesting. Otherwise, if you want to keep it simple, the liability works perfectly fine. In this case, I'll set it up as a personal loan with this feature. Now, I'm going to give it a name. So I'm going to say loan from mom. Let's say that I borrowed money from my parents. And let's say that, again, we're going to do zero as the current balance. Let's say that they're not charging me any interest rate and that there's no monthly payment yet. So I'm going to hit next and done on all of that. I also need to create a new category to pair with this loan feature, just like we did on the loan from friends. So again, I'm going to say loan, I'm going to say mom loan payback. And then I'm going to add this to my bills category. Next, done. Okay, so now you can see under my loan section, I've got this brand new loan from mom category. Well, again, I'm going to do the exact same thing where I'm going to initiate a transfer, but instead of this time going to the asset, because in the last example, I was giving the money, and this time it's going to be from the liability. So I'm going to add transaction. The payee is going to be payment, loan from mom. The category will be the mom loan payback, and it's going to be an inflow to my checking. Let's say that I borrowed $5,000 and save. So now all of a sudden you can see that my loan from mom shows a negative $5,000. That's the amount that I owe her and need to pay back. From here, of course, I would go to my budget and I'm going to have a positive $5,000 in my mom loan payback category that I can take, move up to ready to assign, and use for whatever I need to use that money for, whatever the reason is I borrowed the money from my mom. Then going forward, it's going to be the exact same thing that we did for any other regular loan payback, or the same way we did the loan to friend. Whenever we make payments, we're going to add transaction. The payee is going to be both a transfer, so payment loan from mom. The category is going to be that mom loan payback. Let's say that we're paying her $250 a month, save, and then now we can watch that reduce down to $47.50. And in our budget, we'll need to cover that spending just like we would any other bill. Again, the reason that I like to do it this way is because it makes it really easy to filter in and out of our reports whenever I'm trying to analyze my spending and see what's going on. So the third thing I want to share is how to move an account from on budget to off budget or vice versa. But before I share how to do this, let's talk about why you might want to do this in the first place. Well, as I lay out in my video about multi-account YNAB setups and sort of the pros and cons of using accounts as savings and checking accounts versus as assets in YNAB, and how what you want to do with the money really determines whether or not you should set it up on or off budget. After watching that video, if you decide that you're not happy with what you had initially done and you would like to make a change, unfortunately, there's not a quick sort of just click this button and poof, now all of a sudden the account has changed places. There's a little bit of work in order to move that account if you want to do it without having to totally do a fresh start on your budget. If that's you, that's what I want to walk through. So let's say that I want to move this long-term emergency fund savings outside my budget. I don't want this money mixed in with the rest of my money anymore, and I want to get this outside into the tracking area as an asset. The first step that I'm going to want to do is to reconcile this account. Now, if you have any questions on reconciling, I have a whole video about that. You can check it out in the description below. But we're going to assume that I log into my bank and that this account balance is correct. I'm going to click reconcile and yes. It's really important to lock all these in place before we get started. Now, the next thing we're going to do is if you're linking the account, you're going to right click and unlink this old account. Then we're going to click Add Account, linked or unlinked, whichever one you're doing. Let's say that I'm doing a linked savings account. I'm going to rename that to be whatever I want. And here's the key: make sure that the account type you choose is the correct account type for wherever you're wanting this new account to be. In this case, I want the new account to be an asset in the tracking section. So I hit next and done. Next, I want to delete this starting balance in the new account. Once I've done that and hit the delete key on my keyboard, I should have no transactions in this new account. Now I'm going to go back to the original account, the one that's on my budget in this case, select everything, click Edit, come down, move to Account, and we're going to choose Emergency Fund. Now I should have no transactions in the old account, and I can right-click and delete it. Now at this point, if you were moving from off budget to on budget, you'd be almost done. But when going from on to off, we've got a little bit more cleanup to do. So when you come down to the new account, the emergency fund in this case, you should see all those transactions here. They should be locked in place, and this balance should be correct. You can hit the reconcile button if you want to, just to ensure that it's done. Everything should be correct here. But you're now going to notice this white dot next to my checking account. And that's because with this emergency fund savings, I'd been making transfers back and forth. And so now YNAB doesn't know what to do with these transfers. So what I'm going to do is click this 6 new transactions to import, approve, or categorize up top. And you're going to notice all of these weekly transfers from my checking to the emergency fund, and then it looks like one withdrawal from the emergency fund back into checking. And because these accounts were on budget earlier, YNAB didn't care. When you make transfers between on-budget accounts, they don't get categories. But the second you start moving money from an on-budget account to a tracking account, now you need to categorize that spending. So where do I put this? Well, this comes back to what is the purpose of the money. In this case, I actually have a dedicated category called Emergency Fund Contributions. This is for when I want to contribute to my emergency fund. So I'm going to categorize all of these transactions there. So I can just double click, say Emergency Fund Contributions, or I could select all of them and do it in bulk by clicking Edit, Categorize, Wealth Building, Emergency Fund Contributions. At this point, I've got no white dots in my checking. My new account looks correct. I probably would double check this balance and reconcile the bank account just to make sure that everything looks right. And then the last step is I want to go back to my budget and see if anything looks out of whack here. And it does. Because I was holding this money all on my budget, the emergency fund money was mixed in with everything. So you can actually see here that now I've actually assigned more money than I have. And it's because if you look at this emergency fund contribution category, you'll notice that I have $7,000 available for my emergency fund, which is no longer true because all of my emergency fund money is outside the budget in the tracking area. So my last step is I need to click this and move it to ready to assign. Once I've done that, now I should have no negative numbers in my available column anywhere. All of my accounts are reconciled. That tells me that I'm good to go and everything is how I want it. If you wanted to do the opposite and move something from off the budget to on the budget, you would follow the exact same steps. And just again, make sure that you do your cleanup at the very end. So the fourth thing I want to show you is pulling in old transactions and reconciling correctly. But before we do this, I have a hefty disclaimer, which is this is difficult and really time consuming. It's possible, it's just not for the faint of heart. So make sure that you actually have a good reason for why you want to pull in all this old historical data and that you're actually going to use it to change behavior or learn something about yourself or make some decision in the future. And if that's you, here's how to do it. The first step is decide what account you're going to pull in. So let's say that I want to pull in all of my old transactions for the last 6 months or 12 months from this Discover card. Well, the first thing I'm going to do is reconcile this account for today. So at least I know that it's correct as it stands. So let me go log into my Discover account, see what the current balance is, 331096, 331096, awesome, reconcile, yes. So now at least I know all of this that I currently have is good to go. So the next step is I'm going to go to the bank and find the area where I can download the transactions for the date time period that I'm wanting. Let's say that I'm going to go to Activity, and activity and statements in Discover. Obviously, your bank is going to look different, but most banks use the word activity, so look for that. In this case, I'm going to try and select a certain time period. Maybe I want to do the last 12 months of activity. A lot of banks will actually let you set very specific dates. So you can actually click a date on the calendar and say from this date to that date. Although there are some banks, like I think Amex maybe, that you can only download each statement cycle at a time, which is really annoying because it takes a while. But either way, you want to find where you can get to a screen that looks something like this, that shows all the transactions for the time period you're wanting, and you want to find a download button. Hopefully, you then have these options. So in an ideal world, you're looking for a QFX file, also known as a Quicken file or Quicken Web Connect. That's your ideal. Also, if that's not there, you can use a QIF file. And if that's not there, you can use a CSV file. I'll leave a link down in the description below to YNAB's documentation on how to format a CSV file, though, because it's a real pain. It adds a whole nother step to this process. So ideally, you'd be able to do Quicken, QIF, or QFX, although there are some banks, like I think SoFi, that literally you can't download anything. So now, I've downloaded this file. It's went into my downloads folder. I'm ready to go back over to YNAB. From here, I can either click File Import, navigate and find the file on my computer, or I can also just, if I know where it's at, drag and drop the file right in here. Now, it's going to be important to go ahead and select this little checkbox that includes all the previous transactions since before your last reconciliation. Make sure that you do have the correct account selected. Also, scroll through here and make sure that the outflows and inflows look correct. So you can see Amazon out, 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 out. You can see internet payment came in, so that's all right. If for some reason they were reversed, you could select swap inflow and outflow and then click import. At this point, all of your transactions should be in here, and you can see you've got your work cut out for you. You've got a lot of categorizing ahead of you. Before I waste a bunch of time trying to categorize all this stuff, I actually want to go ahead and reconcile this and see if I can get the balances trued up, because now my bank account balance for this account is going to be way off. So there's two ways to do this. The first way would be to try and look at where you started. So you can see my most recent, or my oldest transaction now is one from February 5th, 2021. So what I could do is go here and scroll back to February 5th, 2021 and see if my bank gives me a running balance at this time. Some banks do, a lot of banks don't. And so ideally, if they give you a running balance and tell you the running balance at the end of the day on that day, then awesome. All you would need to do is come back here, find your starting balance, edit it to right before you started. So in this case, February 4th, 2021, and then just change the starting balance to whatever it should be if you were able to find that. Like I said, though, most banks won't have that. So if that's you, you've got to do an extra little trick to get this trued up. The second way to get this balance is to let YNAB handle the math for us. It's a little bit trickier since this one's a credit card, but the same thing will work. So I'm going to double click this. The first thing is go ahead and make the starting balance 0. Now I know the starting balance wasn't 0. So I know that that's wrong, but that's okay because at least now I get the cleared balance for whatever YNAB thinks it should be if the starting balance was 0. Next, I want to go find whatever the current actual balance is on this bank account. You can see right now I actually owe $3310.96 on this Discover card. I'm going to go ahead and copy that number. So then I'm going to come back to YNAB, and here's where we have to do a little bit of math. I need to update the starting balance on this account with whatever number it should be to make my current balance equal, in this case, $3310.96. So with a credit card, that actually means that I'm going to paste this number, the outflow, plus this positive fake balance right here, 1660.09, which gives me an actual starting balance on February 4, 2021 of $4,971.05, and hit save. Now watch this. When I do this, boom. Now my cleared balance is correct, and I can then reconcile this account and it would match up with what I did. Now, how do I do that? Because if it is different if it's a checking account or a credit card. The basic idea is, again, I'm just trying to find the difference between what YNAB thinks the balance is and what I know the balance is. The reason this works is because if I reconciled my account before I started this whole process, and I know that everything in here with a lock is correct, I know that all of these locked reconciled transactions are correct, and then I drag and drop all my old transactions, which I also know are correct because I just imported them from the bank, then I can let YNAB do the math, trusting that whatever number it comes up with right here, that has to be the starting balance of the account the day before I imported all these transactions. So now I can go through, reconcile this, feel confident that this is correct, and I can move on to doing all of my categorization. And if you're like me in this example and have 643 new transactions to deal with, it's time to spend the next hour or 2 or 10 categorizing all this stuff. So what do? Well, you just go, okay, great, Pilot, that is gas. Wonderful. Sam's Club, that is groceries. Yada, yada, yada. I will show you one trick to be able to speed this up, which is you want to sort by payee. The nice thing about sorting by payee is that then you can see all of the stuff that YNAB is going to group together. So I can zoom out a little bit and say, okay, all my AT&T payments, those are going to be the phone, edit, approve. So then I would do all my fast food eating out. Great, so there's all my Chick-fil-A. Just select all this and just all the stuff that looks like eating out. There's warehouse, that's all eating out. Domino's, that's all eating out. Mexican is eating out. You get the idea. And I can click edit, categorize, and eating out. Great. And so at least if you're sorting by payee, you can start bulk categorizing all these things, and it will save you a little bit of time. Once you've got all of this cleaned up, then you would want to go over here to your reports, look at your spending trends over time, and be sure to watch this video right here about how I actually use the reports to make decisions and change future behavior and really analyze these things to get a lot out of it. Now, once you've spent the hours and you got everything categorized, you got no more white dots over here, you need to go back to your budget and you've got a little bit more cleanup to do. So I'm going to expand everything, and I'm actually going to go all the way back to where I started back in February. Now, I'll be honest, you don't have to do this step, but honestly, if you're watching this portion, you're really type A, you're going to want to do this step. So what we're going to do is select everything, and then we're going to come over here and select reset available amounts. And that just cleans everything up nice and neat. And then I'm going to go forward into the next month and select reset available amounts again, and the next month, and reset available amounts again, and it just keeps everything nice and clean and sort of retroactively budgets for everything. Reset available zeroes out the available column. And if I've done this on a credit card, I'm actually going to click reset available twice each time, so that way it covers all of the spending, and then it also will take the money from the credit card payment as well. And I'm going to do that in every single month all the way until I get back to where I actually am in today, which is March 2022. At this point, I've reset everything all the way to the current day. I can see that I have no negatives anywhere in my budget, and now the money in my ready to assign should make sense. It's the money left over sitting in my checking that I haven't yet decided what to do with, and I have all of this wonderful historical data. So at this point, if I actually wanted to go into my reports and really dig in and go like, where have I been spending money? What's been going on? How do I analyze this? I would watch this video right here about how I deep dive into the reports, how I actually use this information to make decisions about my life going forward. Now that brings us to the fifth thing I want to cover, which is how to handle paycheck deductions. What if I don't want to just track money once it hits my bank account? What if I actually want to track my gross income and all of the different deductions that my employer is taking out? Well, your first step is you need to create a paycheck deductions group with a single category for every single line item that you want to track. So you can see that I've got paycheck deductions here with federal income tax, state and local taxes, FICA taxes, and health insurance taxes. Obviously, this is going to differ depending on your job, things that you might be contributing to, like an HSA or a 401k or anything like that. And then also, of course, what state you're in. You can see that I actually placed the 401k contribution down here into the wealth and savings section. There's a reason I did it, and you'll see when we get to the next tip here in a second. But I have a paycheck deductions group, which is all of my deductions that I have to pay, and then my 401k, or if I was doing an HSA, I would put personally in a wealth building group. Once I've got all of the categories created, let me show you how to create a split expense to handle this. So what we're going to do is we're going to add a brand new transaction. And the key here is you want to set up a template. Now, your pay likely is going to be somewhat stable if you are working a W-2 job with, paycheck deductions like this, but it still might vary a little bit. So we want to set up a template so that we don't have to do this every single time. So the way that we do this is we're going to select the next time we're going to get paid. Let's say that it's this Friday, and we want this to repeat according to whatever our normal payment cycle is. Maybe it's every other week. Then we're going to go to the payee. Now, I leave the top line for the payee blank. And instead, I come straight to the category and hit split. Personally, I'm actually going to go ahead and add all of the splits that I think I'm going to need based on however many different items I'm deducting. Now, let's take this top to bottom. The top line, the inflow, is going to be the amount of money that's actually going to hit my bank account. In this case, let's say that the actual number that hits my account is 2657.54. The next line, I'm going to put the employer's name. Now, some people like to do that. Some people would put like Nick's salary or something like that. It's up to you. The next area, this category right here, we're going to do ready to assign. The memo, we can leave blank unless you want to say something. And then the inflow is going to be the top line gross amount that you're paid. Let's say that my top line is $5,000. I'll even put gross salary right here. Then I'm going to go through, and the next few lines are going to be all of those paycheck deductions categories. So I'm going to have my federal income tax, my state and local tax, my FICA, my health insurance, and my 401k contributions. And we're going to put the amounts that shows up on your statement in the outflow section. So if you're doing this, it'd probably be pretty handy to have a statement. Go ahead and print it out and ready to go. I'm going to actually go ahead and hit cancel here because I've already done this. Let me show you what it looks like. Once you've got this set up, it should look something like this. You've got your top line, which is what's going to hit the bank account, the amount that you're going to get paid, and then all of the amounts that show up in the outflow section right here. And once you've done that, the total amount right here should all add up. And at the very bottom, it should say amount remaining to assign is 0. That means you got all your numbers correct, and they all are going to go to the right place. Let's go ahead, though, and see what happens once this actually posts. Save. Okay. So let's pretend that this transaction just came through. Here it is. And I'm going to go ahead and approve it. Let's see what happens over here on the budget. Well, I'm going to get an additional $5,000 that just came into ready to assign. I get the total gross paycheck because we're putting the entire salary, $5,000, into ready to assign, and we're taking out of all these other places. So I now have an extra $5,000 in ready to assign, and I'm now overspent on all these other categories here. So at this point, I just need to actually, budget to cover those. I could do it one at a time, just like this. Or, of course, I could go ahead and speed things up, click Reset Available, and cover all of that. At this point, my ready to assign now matches whatever it should with my, leftover money plus whatever I already hadn't assigned. And I can go ahead and assign all of that money out, based on how I would normally do it when I get paid. The nice thing about setting this up as a template is that now it shows up in your scheduled transactions area right here. And so it's automatically going to pop up every single time you get paid. And then you just need to double check your statement for that payment cycle and make sure that all these numbers are correct. The last thing I want to show you is that if you're doing this once you're a month ahead, it's even easier to deal with. Let's go ahead and say that I've underfunded all of my stuff and I've actually started budgeting ahead into the next month. So now I have no money in ready to assign. It's all either allocated for March or allocated into the future in April. I'm going to come back into March. You can see that my underfunded is 0 and I have nothing that needs to be funded. It's all green. That means that I've actually put money into my paycheck deductions and my 401k contributions for the rest of the month. I already have put this here based on what's going to be coming out. So then when this paycheck actually hits and I go to my budget, I'm going to have the full gross $5,000 in ready to assign. I'm not going to have any overspent categories because YNAB will have already, I will have already budgeted for that. And so I can take this $5,000 and go ahead and put it into April and start getting ahead even more and budget ahead for not only next month's bills and stuff like that, but also next month's paycheck deductions. So if you want to track all of your money in YNAB and get a super holistic perspective of your gross pay and all the deductions that you're doing, that would be the way to do it. And speaking of tracking your sort of holistic financial situation, that brings us to the sixth thing I want to share with you, which is how you can use YNAB to get a better handle sort of on your next step financial goals and use the data that YNAB gives you to export that to a cool spreadsheet to spit out some even more neat stuff. What do I mean by that? Well, if you're a more advanced YNAB user and you've maybe broken paycheck to paycheck and you've maybe even gotten a full month ahead, you might be ready to start looking at some bigger financial goals like increasing your savings rate and working towards financial independence. You've probably even learned how to add in your different asset accounts, different investment accounts, different liability accounts, and even start to track your net worth in YNAB over time, which is pretty awesome. But one thing that I like to do to sort of take it to the next step is to take the data that YNAB gives me and put it into a custom-built spreadsheet to help me focus on the metrics that I truly care about the most. And if you're like me and working towards financial independence, you might want to do the same thing. So I've got this spreadsheet that I've built, and I've put it down in the link below for you to play with for yourself. But here's what you need to do. First, you want to go over to your budget, and you want to make sure that you've got one dedicated group called wealth building or savings, something to that effect. And this is going to be for any money that you would be considered future wealth building, retirement savings, investing type things. So you can see I've got emergency fund contributions here, 401k contributions, crypto, IRA contributions. Honestly, if you're still in debt pay down mode, you can put debt in here as well, because the whole purpose of paying down debt is to also build your wealth. Really, it's just any sort of wealth building activities that I would want to look at for looking at my savings rate. Okay, so once I've got that in there, then what you can do is look at your YNAB reports, and let's just filter it for just last month. And YNAB will show us what our total income was, $5,000 in this case, and we can see our total outflow of the wealth building. Now, that only is going to work if you are actually spending the money, meaning the money is exiting your bank accounts and going to those assets. So if you're not doing that, if you're holding some of this money on your budget, then you would actually want to look at the total assigned column right here to get this number. So in this case, I would come back to February, look at the total assigned column, which is $950 in this case, and that's going to be the number that I care about. That's the amount that I've set aside for wealth building for savings. Then we're going to pop over to the spreadsheet, and we're going to input those numbers. So let's say, I know this is January 2023, but just go with me here. So I would type 5,000 here, and then I would type 950 here, and then if I really want to go hard, I can track everything. I would actually go ahead and input any of my balances at the end of the month. And this is what I do. At the end of every single month, I just update the balances on each of these accounts. And I've put a bunch of different ones in here, so you likely won't even need all of these different areas, but you could use them if you want to. and you can just update all of your different liability accounts, all of your different asset accounts, and your different investment balances. You can see I went ahead and did an example for a whole year to show you what the next screen looks like. Effectively, though, all you need to take away is that at the end of each month, you would take 5 to 10 minutes to just update every number in each row for that month. What was your monthly income? What was your monthly wealth building contribution? What's the balances on all of your different investment accounts? Any balances on any other assets you want to track? And the balances of any liabilities that you might be paying down. Once you've done that, you can come over to the Returns tab, and this is going to calculate for you a number of different things. You can see it's going to calculate your total number of what I call contributions, right? This is the amount you're investing for yourself. It's going to calculate your total investment value for that month. It's going to calculate the total lifetime return, the annualized return, a year-to-date calculation, and most importantly, the thing I pay the most attention to, my monthly savings rate. You can see I've got this column highlighted here, and you might be aiming for a 5 or 10 or 15 or 20 or 25% savings rate. And so by putting in your monthly after-tax income into the input sheet and your total monthly amount that you've put towards wealth building, this will spit that out for you. And then if you scroll down, you can also get a nice little chart that plots your investment growth and your savings rate over time. Like I said, I'll leave a link down in the description below if you'd like to play around with the spreadsheet for yourself. The big idea here is that YNAB is an incredible tool to help you pay down debt and get a handle on your budget. And once you've mastered all those things, what I want you to do is start to take it a step further and actually start, encouraging yourself by doing something like this to increase your investment contributions, which is ultimately going to increase your savings rate and supercharge your wealth. And speaking of using YNAB to hit your bigger goals, the 7th thing I want to share with you is changing your category structure to budget based on your values instead of based on when something is due. To help you understand this, let's talk about eating out for a second. Let's imagine that you and one of your friends wants to go out to eat with me and my wife, Hannah. Let's say that we all go to our favorite restaurant, the Waffle House, and let's say that we all order the exact same meal. So we're at the Waffle House, sitting in that little tiny booth. We've all ordered the All-Star Special, which, as an aside, that there's no way you're going to be able to fit all those plates on the table. But let's say that they figure that out. We've got the same meal at the same restaurant, spending the same amount of money. But we might all be doing it for totally different reasons. One of us might be doing it because we just wanted the social time. We wanted to get out and hang out with friends, so we spent money for social. One of us might be doing it for convenience. Maybe we just didn't want to have to cook and clean, and so going out and having somebody else do that for us sounded nice. Maybe another one of us just wanted to actually just get out of the house. Maybe we worked from home all day long, and then we were just tired of sitting inside and looking at these 4 walls, and so we wanted to spend money for novelty, for a new experience. And yet maybe one of us actually went for the food. Maybe we're a foodie and we really care about the fine dining that is Waffle House. The point is, we've spent the same money at the same place doing the same thing, but we did it for totally different reasons. See, when you first start doing YNAB, most people are paycheck to paycheck, or at the very least, they're not a full month ahead. Our natural inclination is to build a budget based on when things are due. YNAB's default templates encourage this, and so do mine. That's why you see things like immediate obligations, stuff you have to pay for now, versus true expenses, things we should plan for down the road. Same thing with me. When I coach people through this, I typically set them up with bills and irregular expenses and monthly stuff, and we sort of structure the budget based on when we're going to need the money. But once you've broken paycheck to paycheck, once you've gotten a full month ahead, when you start really digging into the reports and you're trying to figure out how much you're spending in these different areas of your life, looking at how much you spend on the bills is not that helpful. It doesn't help you make future decisions about what is and isn't important to you. Instead, we should totally rethink our category structure once we've broken paycheck to paycheck for how we can get really good data to help improve our decision making. But I know that when you first hear me say this, you're like, okay, cool, that sounds good, but how do I actually implement that? And that's why I want to share with you mine and Hannah's current budget. We've transitioned over the last year from a when something is due budget to a what do we actually care about and where do we want to spend our money budget. This is our current budget setup. And I just want to talk you through it, knowing that you're likely going to have different categories than us. Your life is likely very different than ours, but maybe it'll give you some ideas for how you could better group your categories together. Our first group is what we call joy. These are the things that just bring us a lot of joy in our life, the things that we want to spend money on, the things we're excited to spend money on. You'll notice we have one eating out category here, a coffee category, our individual spending money, and also some bills, entertainment subscriptions like Spotify and Netflix go here for us. The next group we have is family relationships. Now, you'll notice a couple funny things here. We have people in this group, like our nephews. We have another eating out category for when we want to go out to eat with family and be able to set aside money to pick up the bill. We also have our pets and pet insurance in here. We also have gifts and Christmas in here. To us, when we think about spending money on these areas, the ultimate value is time with our family or building relationships with people. This is what we're ultimately spending money on, and so let's label it family and relationships. It's also really helpful because when we go look at our annual spending, we can see how much money do we spend on things that bring us joy? How much money do we spend on things that help improve our relationship with the people we care about? The next group is our home expenses. Now, we put home into all one big group, and that's really important because if you're thinking about buying a new home or moving, you want to know, how much does my current home cost me? And if your home maintenance is down here in another category and your mortgage is up here and your insurance is over here and you've got these different categories all spread across different groups, it can be kind of difficult to see how much your housing costs you. So I think it's important to put all of that into one area when you're ready. You can see we've got our mortgage, utilities, pest control, phone and internet, furniture and decor, small home improvement, large renovation projects, and maintenance items, all in one home group. For us, the property taxes and the insurance are wrapped up in the escrow of the mortgage, so I don't have separate categories for those. Next, we have health, wellness, and appearance. This again might be a little counterintuitive, but when we think about why do we pay for a gym, why do we buy the groceries we buy, why do we buy the clothes we buy, why do we buy the workout shoes that we buy, why do we buy cosmetics for taking care of my beard, why do we do those things? Well, it contributes to our overall health, our physical health, our mental wellness, and our appearance, how we present ourselves to the world. And so for us, those all go together here. Next, we have spiritual and giving, which is where we do our tithing and our Bible study. Then we have vehicles. Now, this one's really important. Most people tend to lump the entire family gas into one category, the entire auto maintenance into one category, but that's not helpful. If you're thinking about changing vehicles, if you're thinking about getting a new car, you don't care how much the whole family spends on gas. You don't care how much the whole family spends on auto maintenance, especially if you have wildly different vehicles. We have an F-250 with 280,000 miles on it, and we have a Saturn Vue. They're totally different vehicles. The gas and maintenance costs are totally different. And if we lump it all together, it's hard for us to get a real understanding of how much one vehicle costs us versus another. This is especially important if you've got teenage kids who are also driving. So once you've moved beyond sort of basic YNAB, I like to break this out. So you can see we have our Vue gas, insurance, and maintenance, and then we have the F-250 gas, insurance, and maintenance. This helps us see what's the true cost of the F-250 and the true cost of the Vue. I could even simplify here by just lumping all of these into one singular category, and the same thing for the F-250 if I like. Next, we have camping and traveling. This is not going to be that relevant for a lot of people, but for us, we used to live in an RV full time. Now we don't. Well, we're actually in the process of moving back into the RV, but that's a story for another day. And so we have a camping and traveling group, and it basically accounts for all the expenses associated with camping and traveling. Then we have, like I said, that wealth building group that you already saw. Then we have a preparation group. To me, this is preparing for the worst. You could say this is sort of like true expenses, but not really, because a lot of what's considered a true expense, auto and home maintenance, are now worked into my other groups. So to me, preparing is for a lot of the worst case scenarios, a medical emergency, pet emergency, or income loss. And then we also have our life insurance and health insurance down here as well. Things in my mind that sort of are preparing for the worst. A reimbursements group, as you might expect, and then we have a dreams and goals group to just sort of remind ourselves what some future dreams and goals are that we might be working towards. Obviously, your budget is going to be totally different than my budget, but maybe you can use some of these as a starting off point. I'll leave a link down in the description below to a place where you can download a copy of all of these categories so you can refer back to them as you're tweaking your own budget. Now, if you'd like personal help with your budget, you can use the link down in the description below to set up a one-on-one Zoom call with me where you can share your screen and I can walk you through optimizing your budget for your unique situation. If you like this video, you're going to love this video right here, all about using the YNAB reports and how you can get the most out of them.